You're listening to Storage Nerds Podcast, where we unravel the best-kept secret of the real estate investing world, the storage industry. Join the grassroots guru in self-storage, Stacy Rossetti, in insightful discussions about finding, funding, and running these spaces, allowing you to yield the highest returns possible. Get your foot in the door on self-storage and discover how to properly purchase facilities, negotiate with sellers, and close the deal without worries. Start unpacking that investment wisdom with Stacy right now.
Welcome. Keep introducing yourselves in the chat and let me know kind of, where you're from, who you are. I like to meet all the people coming out. And just so for all the people that don't know who I am Stacy. I've been investing in real estate for 10 years. And I've been investing in self-storage for about 5 years now, coming up on 5 years. And we basically invest in Georgia and Florida. And I'm really excited to say we've got the next facility under contract. It's in the Panhandle of Florida. That is one of the ones that we're going to use for our fund. All right. So if you're interested in investing in self-storage passively, and you say, oh, how can I invest in self-storage but not do any work? You should definitely check out Self-Storage Fund of America. Okay, that's our fund that we just launched a couple weeks ago, and we're raising money for that. I'm really excited. I will be doing a pitch in the next session right after this. So you can go to stacyrossetti.com/fund, FUND, and hopefully Ariel will put all these links in the chat for you guys. But stacyrossetti.com/fund is where you can sign up for my pitches on my fund every single Monday. Right after this, I just explain what the fund is, what we're doing, and then now we finally have like a really good deal under contract that I think is going to be a great first deal for us. So if you want to hear about that, you should hop on the pitch right after that. Okay? And I've been teaching people how to invest in real estate pretty much for the last 8 years, and primarily storage for the last couple of years. And we focus only on storage facilities. Now, that's really kind of what we do. Now, we do have a couple of commercial properties, but those were bought when we picked up some storage facilities. We happened to buy a storage facility that also had a commercial property on it or something like that. But anyways, yeah, so we are looking for facilities, and actually y'all put in the chat where you're looking for your storage facilities. So I would love to know where you're interested in buying your facilities. We are looking for facilities anywhere in the Southeast, in Florida, and in Texas, and maybe along the 10 or the 20 going from Texas to Georgia. We do a lot of driving, and we drive a lot from Texas to Georgia, just because my family is in Texas. We drive a lot from Texas to Georgia because I'm originally from Austin, which is where we're at right now. And then we drive up to New York a lot because my husband, Pete, his family is in New York. So we're going up into that area as well too. But so that's why I said anywhere in the Southeast or along the 10 or the 20 to going into Texas, we're open to buying it. And the fund is there available for us as well too, so we can do that. Now, the 11 facilities that we own, we have bought typically facilities that are smaller facilities in either secondary or tertiary markets. They're typically around 100 units. Now, back in the day, you could get those for really good prices. Now they're a little bit more expensive, but they're still available. The topic that I want to talk to today about is really what types of properties are out there for us people here. What types of facilities are out there to buy? Because we started an acquisitions company, and I have a team of 4 that really look for properties for us, and we are really kind of learning a lot about the market over the last couple months or so. I mean, it's just so hot right now, and for everybody that really doesn't know a lot about investing in self-storage, I thought today what we would talk about is just what type of facilities are out there what I'm seeing out there right now to buy, and just let you guys know so you guys could be aware of what you should be looking for. Yeah, so our acquisitions team, I had an acquisitions a manager. We bought 6 facilities last year. His name's Chris, and he's doing a great job. And then we hired 3 more people to help us find facilities. We're actually extending that out. We're going to be building an acquisitions team so that we can find facilities for our students as well. So if anybody wants us to look for facilities, then you should join Storage Nerds and come and be part of the community. It's a great community, and the goal of Storage Nerds is to find them, fund them, and run them. And so basically, I really want my students to be successful. So we are going to extend our acquisitions team out to all lifetime members of Storage Nerds, and we're going to get out there and look for some facilities for you. So if you're one of those people that's like, man, I really want to buy a facility, but I just don't have the time to get out there and look for a facility, then you should hire up my team, because guess what? We just started. I just hired these people like literally a month ago. We already have a facility under contract, because what they do, and then actually you guys could do this yourself too. You don't have to hire us, but I basically hired another acquisitions manager. He's a manager in training. And he's looking, and he was actually one of the students of Storage Nerds, and he was looking for, he's doing a great job getting out there and finding facilities. And I just said, I should bring him onto the team so he could start looking for facilities for us. And not only for me to buy, but for like other people, because he's really getting very good at doing that. And he's been in the coaching program for a couple of months. And I don't see if he's here actually. Oh, yeah. Yeah, he's here. Awesome. Luther's here. Good. So he's coming onto the team. I'm really excited about it. And so he's going to help Chris to do deal analysis. He's going to be calling. He calls and talks to owners, does deal analysis. And then anything that, I'm not interested in, then we could just pass it along to the students. But, and then we have 2 virtual assistants, right? And these 2 people, these 2 people are from the Philippines. And they basically build lists. That's what they do, is they build the list, and they do that by going onto Google Maps and then other different ways that I teach, but they build the list themselves. So I don't really go out and buy lists. I just we build this list internally. And then what they do is they call the owners. And this is the thing that really a lot of people struggle with, because a lot of people, they either think that they have to go online to look for a facility, right? Because they go, because that's what everybody does. If you look for a house, you go online to look for a house. You go online. If you need a property, you go online, you look for a property. This is the easy way, and actually this is the way that like everybody does. So because everybody's doing it, it's really hard to come across really good deals. Okay. Now, every once in a while, you'll find something. And that's what I wanted to show y'all. Like today, I wanted to talk a little bit about it on Crex. Like, there's Crexy and there's LoopNet. And the deal that we have under contract right now, that we just got under contract this past week, was it was a deal that was on Crexy. I've never bought any deals on Crexy. Never. Okay. So I always go directly to the owner. Always, because that's just, I think this is really, honestly, this is the best way to find deals. Now, this deal is, when you go on to Crexy and LoopNet to find facilities, you're going to just have to know that you're going to have to spend extra money. All right. They are more expensive. And this facility that we found in Florida, it's an income producing property. Okay. And I wanted to let everybody know about this so y'all can be aware of the type of properties that are out there. That's the name of this webinar today, is what types of properties are out there to buy. And as I hire my VAs and teach them to get out there and call facilities and talk to owners, and you get a couple of different types of owners when you call them. One of them is the one where they really have no idea what their property is worth, where their property is valued at. Like, they don't have any idea about cap rate. You find this a lot in like tertiary markets, and they just don't know what their property is worth. And so you're the one that gets to teach them and tell them what it's worth. All right. And I love these types of people because essentially they're really just like regular people like us. They haven't talked to a realtor. They haven't talked to a realtor about, whether or not they want to sell. In fact, most of the time, they haven't even thought about selling. Like, oh yeah, no, I haven't really thought about selling. But if you want to give me an offer, I'm interested in it. And this is something that we come across all the time. All right, all the time. And this is typically what happens in the tertiary market, and especially severely tertiary markets. So like severe, very tertiary markets, right? And a tertiary market is really just country. Okay, so it's the towns that are in between all the other towns, right? So the little tiny towns in your state. Everybody has them. Everybody has tertiary market in all their states. Okay, and now as you get into the Northeast, obviously it's more densely populated. So, tertiary towns are going to be few and far between, but there is some areas where there are like tertiary markets, areas, where you would have to go outside of your comfort zone, or outside of the area that you typically search for a facility. Okay, these properties are really like the type of property that you're going to buy for your first deal. All right, there's nothing wrong with buying a facility that's like a smaller facility to just get your feet wet, or I call it the muddy boots is what I call it, which is what my coach calls it, muddy boots. And it's just really kind of gets you into the game. And the truth is like you could hold on to that property for just a couple of years and sell it and make some money on it and 1031 exchange that into another property. And there's nothing wrong with doing that at all, right? A lot of people are really kind of scared to get into the commercial game because they feel like they have to have a lot of money. You have to be one of these like bigger players. And and you do hear in the investing world, in the storage investing world, you hear like, oh, you need to buy 30,000 square feet or more because it's just a waste of time if you don't, because it's the same amount of work with 30,000 versus 5,000 or 10,000, which may be true, right? But like not all of us can afford like 30,000 square feet of facility, right? So I always say there's nothing wrong with getting your foot in the door. There's nothing wrong with like going out and find like smaller facilities to learn, and figure out how you're doing all this. This is what we do. This is what we've been doing, So, so anyways, yeah. So we have been finding many facilities that are smaller facilities. And in fact, we found a lot of like smaller facilities that are like even less than 50 units. All right. And so I get a lot of questions from my students like, would you buy this type of facility? And you guys can put into the chat what you guys think. If you found a facility that's like 30 units, would you buy this? Right now, obviously, if you've got like a lot of money, this may not be something that you're interested in. But if you don't have a lot of money, then there's no reason to not be interested in something like this, especially if there's land to go with that property. So I have one of my students, his name is Matt, and he was our student showcase last week in our mastermind, in the Storage Nerds Mastermind. We meet a couple of times a month, and we always have a student showcase. And one of the students that's buying properties comes in and tells us like how he's doing it and stuff. And so Matt came in, and he basically he lives in Jamaica, and he's buying property in Florida and Tennessee right now. All right. So don't think that you need to have something right around the corner from you, because he lives in a different country and manages a storage facility. So anyways, his very first property that he bought is like, it's a 24 unit property in the middle of this little tiny town in like the middle of Tennessee. Okay. And he picked it up for like, I don't know, I think it was like 24 units. He picked it up for like 50 grand or something like this. And he just paid cash for it. And he just said like, it's okay because, it's something he just wanted to like figure out how to do it. Now he doesn't have a website for his very first one. He didn't have a website. he takes credit cards by PayPal, and like he just took the old side down and put the new sign up. And it's not gated or anything like that. It's just when he's like, it's in a little tiny town. It's just one of these little tiny, facilities or whatever. He did raise the rates, but not by, not a lot. No, not by a lot or whatever. And so he really just got his feet wet on this, right? That's the very first one. He bought that like as soon as he's been in the coaching program now for like at least a year and a half or something. I can't remember if it was like a year and a half. It's been a while. So his very first one that he bought was just a little tiny facility. Okay. And he's just like figured out what to do. And he's like, got his feet wet. He's getting going. The second facility that he picked up was 100 and I can't remember how many units it is. It's like 100 and maybe 40 or 30. I can't remember. It's an $800,000 facility. Maybe it was 150 units for $800,000. I mean, that's a great price in Florida. And actually it's in like I call it the no man's land of Florida, right? You know what I'm talking about? If anybody knows what the no man's land is, it's like in the middle of Florida, where like nobody wants to live, right? I call that no man's land. But it's booming. I mean, that area of Florida is like, you are not going to go wrong in Florida. That's for sure. All right. And so he picked that one up and he's getting an SBA loan for that. And it was an income producing property, but he could increase the rates immediately once he bought it. Okay. Now, and this is like the one that we got that we're getting also under contract that we found in Crexie. And I wanted to make sure I brought this up to y'all because I'm seeing this over and over again when we look for properties. So smaller properties, there's nothing wrong with buying them to get your feet wet. All right. Income producing properties. All right. When you're looking for an income producing property, you want to, what's happening, what I'm seeing is that there are a lot of income producing properties out there. Okay. Now, what I've noticed is that there are a lot of income producing properties that have not raised their rents since before COVID. So they're making what they were making before COVID hit, but they've been too afraid to raise their rents. All right. Because they're nice people. And guess what? Like most storage facility owners, especially mom and pops, they're like such nice people. All right. Just like my husband. I tell him he's kind of a sucker sometimes. I'm like, I just talked to him today. I was like, did you raise your rents today? That's always my question. It just aggravates him when I ask him that. I was like, yeah, did you raise your rents today? And he just looks at me like. So anyways, so what I've noticed on these income producing properties, and I want all of you guys to be aware, is that there are many income producing properties out there that have not raised their rates since before COVID. So the one that Matt has under contract, it's the same thing. So I don't know what the price per square foot is, but he could increase the rates immediately like by 20 or 30%, right? And sometimes even more. The one that we got under contract in Florida, and Florida is one of these gray areas, to be looking for this at. I mean, pretty much any area, any secondary, primary, I wouldn't say primary, but I would say any secondary market. And mostly tertiary, a lot of tertiary markets, but any secondary market that I've usually had over the past couple of years, I haven't really looked in a lot of secondary markets, but now we're starting to look in secondary markets. And what I've noticed is that there's a lot of facilities out there where they haven't raised their rates in like 2 years. And the truth of the matter is that you better be raising your rates. I went to dinner with a guy over here in Austin the other day. He has 2 storage facilities and he's got a third one under contract. And he said he's raised his rates 9 times in the last year. 9 times. Can you imagine? I looked at Pete and I gave him this like sideways scowl, like, how many times you raised your rents? Right? And now he's in Texas, and Texas, of course, is booming. But, there's a lot of areas that are actually every area is booming right now. So are you raising your rents? right? And we have like this, like internally in our company, and I've shared it with our students, but we have this like master competition sheet where we literally, like, all competition of all of our facilities is on this like sheet for every single one. We have 11 facilities for every single one of our facilities. And the job of one of our VAs is to update that on a monthly basis, to just keep track of like all the competition, what they're charging, and are we charging what they're charging, right? And so that we can make sure that we're up to date compared to everybody else. Now, I talked to another student today, and he bought 2 facilities in November, and as like 150 units total, or some severely mismanaged facilities. And he told me, this is crazy. And they're like, it's a little tiny town. Like, it's kind of in the outskirts of Atlanta, but like, I mean, it's in between like Atlanta and Athens is kind of where it's at. And he said that he's charging $75 for a 5x10. $75 for a 5x10. And it's not climate control. It's just like drive up 5x10, like the one behind me in my picture here. Okay. So market rates are going up, but a lot of owners are not following them, right? So most owners like me, mom and pop owners, do not constantly keep track of like what the market rates are. So they're not increasing their rates to what they should be. So the one that we got under contract in Florida, it's also they're charging. I'm going to go over this deal in the fund. I'm not going to go over it here, but I'm going to go over it in the fund pitch in the next hour. But he's charging 73 cents a square foot, and he should be charging $1.20 a square foot. Do you know how much money he's leaving on the table by not raising those rents? A lot. I mean, in fact, we're going to be able to double the value of that facility just by raising the rents. Isn't that crazy? And we picked that thing up for $1.8 million. And by the time we increased the rents by 45 cents, we may be a little bit less. And see, what we did on that is like, we looked at all the facilities in the area. And they're all like, and we do have competition. Like, I mean, it's in a secondary market in Florida. So there's a lot of like, there's like U-Hauls and public storages and stuff. We did not count those as competition. We counted, like, we only looked at like mom and pop shops. We only looked at mom and pop shops like ours. And they're like, it's 2 facilities that are like within like a mile of each other. It's all gated, nice facility, but like essentially it's just the same owner that's owned it for like 30 years or something. And we looked at all the competition and took out all of the bigger players, because we're not really competition to Cube Smarts that are like 3 layer levels and like these public storages and stuff. Now, if it was like a public storage or a U-Haul that was like one of these ones where they went out and bought an old one and then just fixed it up and that they made that into a public storage, we might consider that. But in this area, there's like public storage use and Cube Smarts that are like like 3 level buildings. And so we did not count those. They're charging even more price per square foot. We only looked at the mom and pop shops that were like apples to us. And they're charging $1.20 a square foot. And this guy is charging 73 cents a square foot. Okay. So basically what I'm telling you is that the rain's starting again. So I'm starting to scream. Basically, what I'm telling you is that when you start looking for facilities, you need to, in secondary markets, look at all the facilities in the area that you're interested in, and then look at what they're charging, price per square foot, and then try to find some of those owners that have not raised rents. That is the secret sauce for the market right now. Okay. So something that I wanted to let y'all know that y'all should be looking for, because this is what we're noticing. And then the second thing is the tertiary markets. getting into the tertiary market. So Matt, going back to Matt, my student, he has, it's like so loud. He has the 24 unit building. And now he has this building in Florida that he's buying. His third building, his third facility that he's buying is another 30 unit facility on 2 acres. 30 unit facility on 2 acres. So he will be adding that. The guy has a little bit of parking, but it's it's full. It's pretty much almost full, but it's on 2 acres. Brand new facility, just built in the last like year to 2 years. But there's definitely room for like, you know, a couple more phases. And so in his mind, what he's doing is he's building the next 30 units, and it's going to cost him like, I guess maybe $100,000 or something like this, you know. So he's like, yeah, I'll spend $100,000 is what I'll do. That's my budget. What can I get for $100,000, right? And he'll do that phase, right? And he'll build that phase, and then he'll fill it out, and then he'll build the next phase, and then he'll fill it up again, and that's kind of his mindset, right? On the little tiny facilities. Okay, so he got his first little tiny one, then he got one in Florida that's kind of a bigger one that's income producing that he could just rip the Band-Aid and just make money on it instantly. And then the third one that he got is one that he could add more units to, but in phases, because it's a small town. You know, you don't need to add a whole bunch of units, you know what I'm saying? So like he's gonna add that next level. He's gonna add that next phase. All right. So he's doing very well. And then his fourth project that he got in the contract, he's only been in the coaching program for a little over a year, right? His fourth one is bought a piece of land. He's getting a piece of land. Okay, so he found a piece of land that his owner will finance. And so the owner's going to finance it, and it's along like this major country road, right? So it's not any backwoods or anything like that. It's like a good location on this like country road in the middle of Tennessee, and he's going to build. That's what he's going to do. He's going to build. Okay? And so that's really kind of what he's been working on. I'm very impressed with kind of how he's doing it, you know, and slow and steady wins the race. And I like just how he's kind of slowly going through and finding these smaller facilities and then building on. And actually the very first facility that he builds will also be a small facility. Because, you know, it's in a small town, and so he's just going to test the water. I think he got a piece of land is like 4 acres, so he could do whatever he wanted. But he's not going to go out and build some massive, huge facility. He's just going to build like 50 units and get it filled, and then later build 50 more, something like this, just to go along with what the market is. And he got a really good deal on the land, and he got an owner finance, so, you know, little money down. Anyway, so that's one of the things I want to talk about is what I've noticed out in the market, tertiary market properties, and then it really depends on like what areas you're in. You know, areas you're in. The Northeast might be a little bit more difficult. I would say Pennsylvania. You know, Delaware. I think there's a lot of opportunity in Delaware, but like Pennsylvania, Maryland, you know, New York, you know, the lower part of New York, you know, those are all, you know, New Jersey. It's, you know, it's of course gonna be a little bit more expensive in Virginia and stuff. It'll be a little bit more expensive in those areas. But there's a lot of tertiary market in the Northeast as well. Pennsylvania, upstate New York, and then in Maine and stuff. I have a student that's building in Maine right now. So tertiary markets, I think you've got to really be focusing on those, especially just think about population, right? What the population is. If you want to be in the secondary market, just know that what you should be looking for is properties that are that have not raised their rents in a couple of years, right? That would be the best. You can't really find, you know, you can't find a lot of severely mismanaged facilities in secondary markets right now because they've all been snatched up. I mean, everybody's out there looking. but there are a lot of properties that have not raised their rents in a while that are still income producing properties. And a lot of owners, honestly, they think this. They're like, oh yeah, I'm free and clear on this facility and I'm making 150 grand. Like, why do I need to raise my rents? You know, I'm saying they think this way because I know, because I meet them and talk to them. So, yeah. So those are the two types of properties I wanted to talk about that I feel like are super important for this market. Okay, so let me know what y'all think about in the chat. I would really like to know what y'all are thinking. In terms of tertiary market, I just want to dig into that a little bit more. Make sure that, like, with tertiary market properties, that you're looking for, like, you're looking at the population growth or stability, you know, being stable, right? That's one of the things that you got to look at. Now, you know, is it okay to invest in a declining market? I mean, the question is, see, the thing is about declining markets right now is that you don't really know the true data. All right, because all of the data is like, there's no real data. I mean, the truth is the last 2 years have been just like nuts and like growth and like people leaving big cities and going to small towns. You know, get out there and really look in your areas and try to find tertiary markets that are, you know, tertiary cities or tertiary markets that are growing, right? You know, which areas, and the only way you can do that is by going to them. So for instance, like I have a facility in a little town called Americus, Georgia. And when you look at it, it says like over the last 10 years, it's declining market of like negative 0.1.4 negative or whatever, right? It's like negative 1.4 or whatever, declining market. But the truth, I mean, I was like, and let me just drive over there and take a look at it. So I drove around all in that. There is so much construction going on in that place. I'm telling you, they're building roads, they're doing subdivisions. I'm like, how are they building so much if it's a declining market? You know, so you got to look at the towns and you got to really look at them. You know what I'm saying? Like, you can't go off of data because data is not current. You can go into Radius Plus in 2018, 2019, you can maybe look up, but like 2020, like, you know, I think you have to pay for 2020. Don't you have to upgrade and pay for, if you want to get like current data, you have to pay more money for it. Right. And I don't even know if they have 2021. Y'all tell me, do they have 20? If anybody knows about Radius Plus, I don't think they even have like 2021 data. Now you could get into like Yardi and use Yardi as a software. That stuff is expensive though. You know, do you have like $3 grand for one market? I feel like that's like kind of really expensive. So, but some people pay. I mean, all the bigger players pay that, right? So all the people that have a lot of money, they all pay for that. And actually the truth is that Yardi does not have any like mom and pop information, like barely any mom and pop information. They do have like some Class D and Class C facilities in their software, but not a lot, honestly, really not a lot. But you could look up in Yardi. I mean, because I got a demo. We had a demo of Yardi just like a couple of weeks ago. So that's why I'm talking about it. But like in Yardi, you can look up like Class C and D facilities that are one owners or like that are owner operators. And then you could call them, right? You could do that. But they only have like certain markets. They don't go out to tertiary markets at all. They do primary, maybe secondary markets, maybe some secondary markets. So I feel Yardi is just doesn't fit into me and what I'm looking for. Now maybe somebody on here, y'all want to go and check it out. Y'all can get a demo. His name's Paul, if y'all are interested. Paul from Yardi, and he can give y'all a demo. Really, really nice guy. Let me know. And I think it's just paul@yardi.com, but I can't remember what his email is. And then Radius Plus doesn't, y'all tell me, I'm pretty sure Radius Plus does not give 2021 data. It gives like 2020 data that you have to pay for, but 2021 data is not available. And I feel honestly that the last couple of years that the market is like severely changed, and it's going to keep changing. It's going to keep changing, you know, because everybody's just migrating to like, everybody that's like in super expensive places super expensive primary markets are migrating to like, second and, primary markets that are less expensive, or even secondary markets, and everybody that was in the secondary market is like migrating to like a tertiary market, right? And this kind of thing. So I think there's a lot of like opportunity in small tertiary markets that are growing. Now, which ones are those? You have to like really do your research and look to see, out in your state or whatever areas that you're located in. Like, so for instance, like we have a facility in Valdosta, Georgia, and that city is growing. That's growing. But I feel like America's had way more construction for that little tiny city than Valdosta did in this big city. Valdosta has like 75,000 people. I think America's had like 15,000 people. But I think that 15,000 number was from like a long time ago, like 2019. It's like, who knows how, like, what's the census for that? Census hasn't come out yet. So anyways, it'll be interesting to see kind of like, because we do personally in-house, we look at population a lot. We really, that's one of the things I ask Chris when he comes, when we talk about deals, like what's the population of this city? Like, is it growing? Is it declining? And we'll have to get in and try to figure out, what the population is and whether or not it's like stable or what's happening, but we invest in also like supposedly declining markets as well. But it's declining. It was declining, a couple of years ago, and it's growing now. Okay. So that's the question. That's the thing I was going to say is like, make sure that if you're going to invest in a declining market, it was declining in a couple of years ago, but it looks like it's going to be growing in the next couple of years. Okay. Okay, good. All right. So those are my two types of properties that I wanted to go over of what we've been noticing by utilizing VAs to call around and find properties for us. Did you guys have any questions on that? Anything that y'all could think of? Any comments? I'm going to look in the chat and see what y'all are thinking here. If anybody has any questions, hang on. Arielyn is listing all of our links in the chat. In Oklahoma, aside from Tulsa and Oklahoma City, the rest of the state is pretty much tertiary and secondary. Exactly. Yeah. I just got off a call with one of my students, and he lives in Oklahoma City. And he has he has like a boat and RV parking place in like some lake. I can't remember where it is outside of the city. And he's looking he's looking in tertiary markets, secondary and tertiary markets of Oklahoma. Oklahoma City obviously is growing very fast. And I think Tulsa is growing very fast. So you just need to be on you need to look, if you want to be in a secondary market, you just need to find those types of facilities that haven't increased their prices. But then in the tertiary market, you can find income producing or mismanaged facilities, because we're still finding those in tertiary markets. Okay. Okay, good. Let me see what else. Sam is saying we're looking at the one in the same area as the one we have under contract. Unique property, 39 units, 2 apartments, and a retail storefront. Nice property and very, very reasonably priced. We are considering. Yes. Oh, that sounds like a good one. Yeah, I like these. We have a facility under contract right now it's storage plus commercial plus an apartment. All right. The only thing that is hard about these types of properties is getting those financed, is finding the money for them, because, investors were like, oh, I just want to invest in storage, or I just want to invest in like apartments or whatever. So just finding investors for those types of properties or finding lenders, it's a little tricky for that. So just make sure you keep that in mind. You have to find a good commercial lender that will lend on those types of properties. All right. Or an investor. Okay. Yes. And then Tim says, raise the rents. Good. Let me see who else. Interested in the search service, but need to know the costs. Oh yeah. So the doors for Storage Nerds are opening on May 1st. Okay. And I only open the doors a couple times a year, and they're only open for 2 weeks. That's it. And I do calls during those times. So make sure that you get on the wait list if you're interested in doing a call with me and just talking about the coaching program. I'll talk about like all the different ways that you could get in, and then the turnkey solution if you want to do that. And but you have to get on the wait list so that you're notified, and then you'll have access to my calendar. Usually what we do is we open the wait list up to to my calendar. And then if my calendar doesn't get filled from the wait list, then we open it up to everybody else. So make sure you get on the calendar. Make sure you get on the wait list so you can actually have access to my calendar. Okay. Okay, good. Okay. And then what else? Okay. I think I have another comment here. Any other questions anybody can think about for finding facilities? Anything else that you need help with for finding facilities? Our VAs, it's very interesting to see kind of how it works. It's very time consuming to call owners. We don't really honestly go on Crexi or LoopNet and look at facilities very often. But this one, I think what happened on this one was one of my VAs called the owner and talked to the owner, and he told him that he told my VA that the property was listed for sale on Crexi, and so that is how he got the property. He said, yeah, my property is listed on sale for Crexi. Like, everything you need is there, and then here's my realtor's phone number. You can call my realtor and talk to him. So he actually did talk to the owner, and the owner's the one that told us it was on Crexi. So I don't know if you count that one as us looking on Crexi or not. What do you think? And so that's how we found the property. But yeah, so we don't really go on Crexi or LoopNet. Our VAs call owners directly. They typically are calling around 25 owners a day, right? It's like 20, they said 25 to 30 owners a day, and after that, they don't want to do any more. So we split their time between building list building, and then calling owners. And we have found so many. Chris is now, and then so the VAs call the owner, right? VAs create the list, and then they call the owners. They do the follow-up. And then if any owner wants to sell, they send the information. They gather all the information first. Once they gather all the information that Chris is going to need to run deal analysis, then Chris will run the deal analysis. If he thinks it's a good deal, we can talk about it in one of our meetings that we have, and then he'll just put the offer in. All right. And so that's kind of how it's working. So you don't need us if you don't want to. You can hire your own VA and do it that way as well too. But if you want to get into the coaching program, then you can utilize ours. And then what we'll do is we'll just hire a VA and have them scour the whole state that you're in, whatever areas that you're interested in. Just call all the owners and then just keep following up. That's what we'll do. Okay. I'm really excited about it. I'm really excited. Okay. All right. Let's see what else. I was driving through a facility of about 100 units and saw several abandoned units with the door open and all the stuff inside, like about 20. Is this a sign of mismanaged facility? Yes, that is definitely a sign of mismanaged facility. If you see the doors are open and you can see all the stuff inside, then whoever's supposed to be taking care of that is not taking care of it. So yes, that's a mismanaged facility. But a mismanaged facility really is they cannot provide a P&L, a balance sheet. They don't want to give you tax returns. They have no numbers to show you. They can't give you a rent roll, or they can give you a rent roll and they're not charging what they should be charging. So for me personally, the one that we have under contract in Florida, that I would consider a mismanaged facility. If you can raise the rents by 50 cents or 40 cents, because like I said, we got that thing under contract for almost $1.8 million, and we're going to just raise the rents by like 40, 45 cents in the next couple of months. It's be worth like $3 million. And they're leaving like $1 million on you, over $1 million on the table. So that to me is considered a mismanaged facility. If you can double the value or triple the value of your property, that to me, in the next year to 2 years, that to me is considered a mismanaged facility. Okay. So yeah, if they don't want to give you any data, then mismanaged facility. If they don't want to give you information, mismanaged facility. Mismanaged facilities are the hardest types of facilities to fund, because you have to raise the money. I mean, you can't go to a bank and get a loan for that. Okay. So depending on what the price is, just be aware that a mismanaged facility is hard to fund. And especially if it's like less than, 50% full, or, there's an economic occupancy of 75%, but only 50% are paying or 40% are paying. I mean, essentially, banks don't want to fund something like that. They want to see that you're increasing the rates, that you're making money on a regular basis, right? That's really what they want to see. Okay. And that you can prove to them that you'll be able to pay the mortgage. All right. And yeah, but I mean, I would talk to lenders and just see, just in case, but I say most of them, it's pretty hard to fund. Okay, good. What else? What other questions can you think of? What other questions can you think of about finding facilities? Put them in the chat, or, anything like that. What kinds of cap rates are you using to come up with values of mismanaged facilities? Okay, so cap rate in a mismanaged facility is like impossible, right? Because you're buying these at like horrible cap rate. I mean, if you run the numbers on a mismanaged facility, the cap rate is like super duper low. All right, so you can't really look at cap rate for mismanaged facility. What you need to be looking at, honestly, is the opportunity, right? What is the opportunity on the facility? Can you double or triple the value of the property? I wouldn't buy a facility if I couldn't a mismanaged facility, if I couldn't double or triple the value of that property. Now, typically, and now of course, the higher the more you pay on a facility, the harder it is to double or triple it, right? So if you buy a facility for $1.5 million, right, to be able to double the value of that property is, that's quite a feat, right? So sometimes you'll hear like, I can 1.5x it, or I can 2x it, or I can 3x it, or whatever, but mismanaged facility, if you buy a facility for 300 grand, you should be able to triple the value of that property in the next couple of years, just as long as it's not a severely declining area. If it's severely declining, then might not be a good area to invest in. But if it's like, if it's a good town or a good city, you should be able to double it, at least minimum double, if not triple the value of that property. So we have a facility in Augustus that it was like 400 grand to purchase. And over the course of a year to a year and a half, you should be able to like double the value of that property. That property is in a primary market. That was in a primary market. So in primary markets, it's a little bit, you're looking at like cash flow versus appreciation. You know what I'm saying? So we could double the value of the property in a primary market. In secondary and tertiary markets, you should be able to do a little bit more than that a lot of times. All right. So that's why a lot of the people that are, hedge funds are in primary markets right now. And, they're looking for like certain types of properties. Really, they're looking for a lot of cash flow with a little bit of appreciation. They're okay with just raising rents and making some money. Right. But when you get out into like secondary markets, you should be able to really increase the value of that property, and definitely in tertiary markets as well. So you're just making a little bit, you're making less money. So if you buy something for 300 grand and you could sell it for 900 grand, okay, great. You're making 600 grand. Now in the secondary market, you can buy something for $1.8 million and increase the value to $3.2 million. Right. And you're making a $2 million, 1.3 or 4, whatever $1 million it is. So it's just a bigger amount of money makes you more money, right? A smaller amount of money still makes you money, but it's just less money than a different market, right? Does that make sense? I hope that makes sense. All right, good. What else? What other final questions? Anything else? Otherwise, I'm going to hop off and I'm going to get ready for the fund. Any other final questions? Okay, and then don't forget, so we have now, we meet every Monday, so y'all can hop on at any time. If you're an REI USA member, welcome, because I'm now teaching for REI USA. Make sure you check out REI USA if you want to learn how to invest in real estate, but you don't have a lot of money to do that. REI USA can help you do that. And we do have podcasts. There's an REI USA podcast and there's a Stacy Rossetti podcast. There's a Storage Nerds podcast. So make sure if you miss any sessions at all, you can always check out the podcast for REI USA or Stacy Rossetti. Okay. Storage Nerds. I appreciate you guys hanging out with me today and putting up with the storm. All right. And we'll talk soon. Well, I'll see you next week. Okay. Take care.
Thank you for joining us for this episode of Storage Nerds. Hope this informative conversation inspired you to go out there and jump into this highly profitable business venture that people rarely talk about. Get more tips on storage space investing at www.stacyrossetti.com. Don't forget to subscribe to the show and leave a rating. Together, let's build that thriving passive income one storage space at a time. Until next time.